Ladies and gentlemen, Archivist here. If you are currently looking at the stock market tickers flashing green in New York, you are looking at a hallucination. If you are listening to the political theater regarding the Federal Reserve Chairman and his legal battles, you are being distracted by a puppet show designed for children. Stop looking at the noise. Stop listening to the pundits who are paid to keep you calm while the building burns down around you. They are lying to you. They have always lied to you, but today the lie has become mathematically impossible to sustain. You need to look at a boring bureaucratic notice issued yesterday. It does not scream, it does not shout, but it is the most violent document released by the United States government in the last decade. On the 14th of January 2026, the United States Mint officially suspended sales of its numismatic silver products, including the American Silver Eagle. The official reason given was extreme price fluctuation and a need to reevaluate pricing adjustments. Do not let your eyes glaze over. Do not dismiss this as a supply chain hiccup. This is not a delay. This is a default. The United States Mint is the entity responsible for producing the legal tender coinage of the global reserve currency. When the producer of the money says they can no longer afford to sell you the money because the raw materials are too volatile, it means the currency has already collapsed. They just have not admitted it on the 6 o'clock news yet. The economists in the West are laughing at this. They call it a logistical error. They call it a temporary pause. They are fools. They are analyzing a forest fire by looking at a spreadsheet of tree growth rates from 10 years ago. This is not a pause. This is a burn notice. The United States government has just admitted that it cannot source silver planchets at any price that maintains the illusion of the US dollar's value. Let us strip away the bureaucratic camouflage. Reevaluating pricing is code for we cannot find the metal. The US Mint does not make its own planchets. It relies on private suppliers like Sunshine Minting. If the government of the United States, with all its printing presses and political leverage, cannot secure silver for its own coins, it means the physical market has gone dry. The cupboard is bare. This is the moment we have been warning you about. This is the silver singularity. Why am I speaking to you with such certainty? Because the data is forensic. It does not care about your feelings or your political affiliation. Look at the numbers. They are screaming. While the U.S. Mint shuts its doors, the Shanghai Gold Exchange reported a closing price for physical silver at $101.71 per ounce. At the exact same moment, the Comex in New York was trading paper contracts at $92.23. Do the math. That is a spread of nearly $10. In a functioning economy, that spread does not exist. In a normal world, bullion banks would buy the cheap contracts in New York, take delivery, and fly the metal to Shanghai to pocket a risk-free profit. That is called arbitrage. It is the grease that keeps global finance moving. But that trade is not happening. Why? Because you cannot fly a paper contract to China. You cannot melt down a digital promise. The reason the arbitrage window is open and widening is that there is no metal in New York to move. The vaults are empty. The inventory listed on the Comex is a lie. It is rehypothecated. It is leased out. It is owned by 5 different people at the same time. The U.S. Mint's closure is the physical confirmation of the Shanghai price. The real price of silver is not $92. The real price is infinity because you cannot get it. The West has lost the ability to price the metal because the West has lost the metal itself. We are witnessing the bifurcation of the world's monetary system. The East holds the kinetic asset. The West holds the receipt. This is not an accident. Do not for 1 second think this is a random convergence of bad luck. This is a controlled demolition of the Western industrial supply chain. We are watching the systemic decline of the just-in-time delivery mechanism. The mechanism is broken because it was designed for a world of peace and infinite resources. Neither of those things exists anymore. Let me lay out the evidence for you. I will not give you opinions. I will give you the autopsy report of the supply chain. 1. The refineries are gone. In the last 24 hours, 3 of the world's largest refineries, Johnson, Mathey, Metaller, and Heraeus, have declared force majeure or entered unscheduled maintenance. These entities process 68 million ounces of capacity annually. You do not shut down a refinery for maintenance when the price of your product hits an all-time high. You run that machine until the gears melt. They are shutting down because they are starving. They have no feedstock. The mines are bypassing them, sending ore directly to strategic partners in China or holding it back. The refineries are closing to stop the bleeding from margin calls on their hedges. 2. The raw material is being interdicted at the source. Look at Mexico. 33 tons of high-grade concentrate were hijacked on the Durango-Manzanillo highway. This was not a random act of banditry. You do not steal 33 tons of rock unless you have a supply chain ready to process it. This is industrial espionage via cartel proxy. That metal is not going to a pawn shop. It is going to shadow refineries in Asia. At the same time, a mine collapse in Chile has taken a massive copper operation offline, halting the byproduct silver that makes up 70% of global supply. The earth itself is refusing to yield more metal, and the humans are stealing what is left. 3. The logistics are dead. The Red Sea is closed. The reports of the Maersk-Denver crossing safely are a Potemkin village, a staged event to pretend normalcy exists. The reality is, the attack on the Magic Seas, insurance premiums have tripled. Ships are diverting around Africa, adding 14 days to delivery times. In a liquidity crisis, 14 days is a death sentence. The flow of metal from European refineries to Asian technology hubs has been severed. This brings us back to the U.S. Mint. They are the canary in the coal mine, but the canary did not just stop singing. The canary exploded. The U.S. Mint is telling you that the dollar is broken. When they say they are reevaluating prices, they mean they are waiting for the paper price in New York to catch up to the physical reality in Shanghai. They are preparing for a revaluation event where the price of silver is reset overnight by fiat. They will likely reopen with prices well above $150, effectively devaluing the currency in your pocket by 50% in real terms regarding purchasing power of strategic assets. Who is the bag holder in this scenario? It is not just the retail investor who bought SLV thinking they owned silver. The bag holders are the sovereign states of the Western Alliance. The United States government is the primary bag holder. They have depleted their strategic stockpiles. They have allowed their manufacturing base to be hollowed out. Now they face a kinetic conflict environment with empty warehouses. The industries that rely on this metal are not making jewelry. They are making cruise missiles, solar panels, and advanced electronics. Look at the solar industry. It is a black hole. Silver is 30% of the cost of a photovoltaic cell. Manufacturers like Jinko and Trina are warning of losses because they cannot pay $100 an ounce. But they have no choice. The demand is inelastic. If they do not pay, they go bankrupt. China knows this. That is why they have placed export controls on strategic metals. They are building a firewall around their resources. They are starving the West's green energy transition to death. You cannot build a solar panel with a paper contract. You need the metal. China has the metal. You have the paper. The secondary bag holders are the Western central banks and the bullion banks in London. The LBMA and Comex inventories are at multi-year lows. The registered silver, the stuff actually available for delivery, has declined by over 70% since 2021. The only metal left in those vaults is eligible silver owned by long-term holders who are refusing to sell. The banks are naked short. They have sold promises they cannot keep. When the U.S. Mint closed, it sent a signal to every holder of a paper contract. Delivery is impossible. This triggers the run on the bank. But it is not a bank of cash. It is a bank of physical materials. We are seeing a run on the periodic table of elements. The illusion of the paper market is ending. For decades, the price of silver was determined by men in suits in London and New York trading futures contracts with high-frequency algorithms. They suppressed the price to maintain faith in fiat currency. That mechanism has failed. The price is no longer set in New York. It is set by whoever has the physical metal. Right now, that is the Shanghai Gold Exchange and the strategic reserves of the BRICS nations. You are witnessing a hostile takeover of the global pricing mechanism. The U.S. Mint's suspension is the surrender flag. They are admitting defeat. They cannot source the material to maintain the charade. This is a kinetic event. It is not theoretical. It is happening in the physical world. The trucks are being hijacked. The ships are being sunk. The mines are collapsing. The refineries are powering down. And the government is closing the sales window. The gray rhino is charging? No. The phase shift is accelerating. The structure of the global economy is changing, phase from liquid to solid. In a liquid market, capital flows freely. In a solid market, capital freezes. We are freezing. The media will try to spin this. They will tell you that the mint will reopen soon. They will tell you that the supply chain issues are transitory. They will use that word again. Do not believe them. The supply chain is not clogged. It is severed. You cannot unclog a severed artery. You can only bleed out. The implications for the dollar are catastrophic. If the dollar cannot buy silver at the quoted price, then the quoted price is a lie. If the quoted price is a lie, then the value of the dollar is a lie. We are entering a period of extreme volatility where the purchasing power of fiat currency collapses against real assets, not gradually, but suddenly. The spread between Shanghai and New York is the thermometer of the dollar's death. As that spread widens, the credibility of the U.S. financial system evaporates. When the spread becomes too large, the Comex will declare force majeure. They will settle your contracts in cash. They will give you back your worthless paper dollars and tell you to go away. They will not give you the metal because they do not have it. This is the silver singularity, the point of infinite density where the paper market crushes under the weight of physical reality. What does this mean for the allies of the United States? Japan, Europe, the UK, they are trapped. They hold U.S. debt. They hold U.S. promises. They are part of the bag holder alliance. They are being financially conscripted to support a dying system. They will be forced to print money to buy U.S. debt while their own industries starve for raw materials. We are watching the cannibalization of the Western alliance structure. So what is the move? What happens next? The U.S. Mint will eventually reopen, but the price on the sticker will shock you. It will be the new reality. By the time they reopen, the street price for a silver eagle will likely be over $150. The disconnect between spot price and physical price will become permanent. You will see a spot price of maybe $95 and a physical price of $150. The premium is the penalty you pay for believing the government's official numbers. This is the resource denial protocol. It is active. It is not a drill. Rule number 1, assume zero delivery. If you do not hold it in your hand, you do not own it. Do not trust the vault. Do not trust the ETF. Do not trust the futures contract. If the U.S. Mint cannot get silver, your local coin shop certainly cannot get it for long. The inventory you see on the shelves today is the last inventory that will exist at these prices. Rule number 2, ignore the paper price. The chart on your screen is a history lesson, not a price tag. The real price is what you have to pay to get metal in your hand. That price is exploding. The paper price is a ghost. Do not trade based on ghosts. Rule number 3, prepare for the unobtainium phase. There will come a point very soon where you cannot buy silver at any price. It will simply be unavailable. The miners will stop selling. The refiners will stop refining. The mints will stop minting. At that point, having paper money will be like having a thirst in the middle of the ocean. Water, water everywhere, nor any drop to drink. Money, money everywhere, nor any ounce to buy. Rule number 4, watch the force majeure notices. When Metalor and Heraeus officially publish their letters, it is game over. That is the final bell. That is when the industrial panic begins. The panic buying from Apple, Samsung, and Tesla will dwarf anything the retail investor can do. They will buy entire mines. They will buy the ground the metal sits in. We are at the end of the era of financial abstraction. We are returning to the era of physical consequence. The U.S. Mint has closed its window. The question is, are you still standing outside waiting for it to open, or have you already secured your position? The door is shutting. The lights are flickering. The system is seizing up. This is the archivist. The protocol is active.